CNBC TV 18, celebrating 19 years of business leadership.
Never a dull moment in Indian financial markets, never a dull moment in the Indian economy, and never a dull moment in the Indian commentariat either. Well, the latest to make headlines is a book written by the former Chief Economic Advisor of India, Dr. Arvind Subramanian. The book called Off Council has already made headlines. Dr. Subramanian, thank you very much for joining me in this conversation about your book.
Thanks for having me.
I won't start with the most dramatic statement. I'll keep that for later. That is the word draconian, which you have used. But let me start with, the introduction, where, the way you have ended your introduction chapter is somewhat despondent, it looks to me. The question is whether things may have to once again turn really bad before they get better. And even in the earlier paragraph, you say the problems of the twin balance sheet need to be addressed quickly. Only through prompt action can the TBS be minimized. Make no mistake, the passage of time will erode the country's resolve. We are sitting at the last year of this 5-year term, which was ushered in with great promise by people like us. I mean, 335 majority. We thought, this is the turning point. But when you read these paragraphs, you seem to be a little disappointed about the last 5 years.
Well, as I say, towards the end, overall, some really major actions were taken. And I would say, I think the GST was a big achievement. I think the IBC finally, it provided a way forward for the twin balance sheet challenge. And I also think that this whole kind of almost like a new alternative vision, it's a kind of socialist welfarist vision of the Prime Minister's, which is providing essential services, private essential services, using the state, using technology to deliver this, and health, housing, toilets, power, etc., etc. So I think these are, big achievements for which I think the government deserves a lot of credit. I think that, as I say, some things were not done. For example, the Air India privatization is still there. I think I've mentioned also agriculture, continues to be a source of anxiety, and of course, manufacturing exports also have kind of languished. So I think that some big achievements. Some more things could have been done. Some setbacks. I think the return of protectionism is also a bit of a setback. And of course, also, while the new vision of using the state to provide goods and services is I think really a defining thing. It's also true that the state has made a comeback in other areas, which I mentioned in the book. And I kind of attribute that to some extent to what I call stigmatized capitalism, which is a long pervading phenomenon, right? The state is back in some good ways, in some ways that, we thought wouldn't happen. This whole HPSC, the kind
HPCL,
of
yes.
HPCL thing,
ONGC.
The LIC, IDBI,
and now it is PFCREC also.
Yeah, PFC. So the state is back, and I do think that that's due to stigmatized capitalism. I think it's not a short run. It's not due to this government. I think it's been there for a very long time, and I would say that one of the things that after 4 years I feel perhaps the most muted about is the fact that the financial system, right, the twin balance sheet challenge, and this is one of the things I say in the book. It's almost 8 years and counting. IBC, tremendous breakthrough, but despite that, I think we have still some way to go. Suddenly, new problems have emerged, kind of out of left field or right field, whichever it is, and so unless we get the financial system onto a solid basis going forward, I think it will always, take a toll on the economy.
But this is a severe statement. Can things get worse before they get better?
Yeah. So I think it's related to my general view that I said this in my first survey, big reforms, big bang reforms, as it were, usually occur in the aftermath of crises, right?
Not when you have a 335 majority. More when you have...
You see, I think the political economy, when you have to take kind of serious action, you need that kind of background. As I say in the book, I thought we had that moment when the Nirav Modi scandal happened. I thought, whatever. And I think it passed. Because it's so, in the case, for example, the twin balance sheet, I've always said, some amount of majority private sector participation is essential, which means the Bank Nationalization Act has to be changed, which means that you have to overcome a lot of opposition. So if that is the case, you need that spur, and that spur only comes when,
there's a crisis.
When you have that sense that, I'm told that Prime Minister Narasimha Rao, when he was asked about all this, take all these actions, etc., and people said, but this, that, and the other, and then he quite sort of sat quietly, and then at one point he said, do you have an option? Do you have any options? I mean, no. That kind of summarizes.
Well, I wanted to ask you about IBC. Is part of your despondency because the IBC has not played to form? I mean, it's 18 months since the first 12 cases were taken to the IBC, and they've not been resolved.
Yeah. So I think we agree that the IBC was the only game in town. Remember, I had advocated a bad bank early on, didn't fly, maybe for good reason, I'm not sure, but we have this. But we've discovered with the IBC that still the deadlines have slipped, right? Only 3 or 4 cases have gotten done, and even those have been in the steel sector. So, and there's a huge overload coming, right? And then there's power, which is sui generis, which I say in the book should be treated as sui generis. And then there's the new NBFC problem, right? Now, so I have a new idea which I want to put on the table, remember that Raghu's asset quality review had a very salutary impact in pushing this, right? Because there was a number, there was a big number. We all knew there was a problem. I think the AQR, I criticized Raghu saying that maybe it should have come earlier, but that's a different conversation. But the fact was very important because it then mobilizes action. So I'm wondering whether we should not have a similar AQR type thing for the NBFCs, because again, this is one of those situations where everyone knows kind of things, but no one is willing to be explicit about it. And so the not being explicit maybe, demobilizes action. So I'm wondering whether, we should have something like that, put the thing on the table and then generate the political momentum for that as well.
Okay, well, I didn't want to steal your thunder, but there have been discussions whether an EQR should be done on NBFCs.
I'm sitting 8,000 miles away, so...
in hush-hush tones, because even the mention of such a thing may again push distrust into the system and block the flow of money. So they may not do it now at all. They may have to wait for complete normalcy to return. But be that as it may, I wanted to come back to, there are several questions in what you have just said. The sui generis, you're almost saying that power should be given a forbearance for now out of the February 12th circular.
See, I think forbearance would be, I think, one way of characterizing it. I don't see it as forbearance or not forbearance. I have, the reason I say power should be different is for a completely different set of reasons, more analytical and conceptual, right? One, these are very good assets. They are so to liquidate them seems like a real tragedy. On the other hand, we also know that if you put them for bidding, they will probably command a very low price. So they you can neither sell them nor liquidate them, whatever. And I think that a lot of the power thing also has to do with government policy, center, states, banks, whatever, right? So it seems to me that the size is huge. A lot of policy preconditions are required. And so, the straitjacket of the IBC might not suit that. So I don't think it's a question of forbearance or delay or whatever, but just, it seems like a different beast altogether which requires treatment. That's my reason
The reason why I'm saying this is that there has been a huge pushback from industry and from government against the Reserve Bank's February 12th circular. Now, that's why I'm speaking about, you have rightly criticized that the AQR or NPA recognition and resolution should have started earlier and should have been much bigger. I mean, you've given us Ashish Gupta's...
I think the chart is pretty telling, I think. Yeah.
Now, the point is, when the Reserve Bank showed that resolve and said that we are going to get, all that is not resolved in 6 months to the NCLT, look at the pushback. That is at the heart of the, government RBI standoff at the moment. The words I hear in the corridors of North Block is, yes, we wanted a cleanup. We didn't want an irrational cleanup. So, this is the problem that the regulator faces. When they, looking back, you say they didn't do enough. But when they are doing, they are irrational. Do you think that it is irrational at all? Wasn't it needed?
So I think that certainly lots of things that the RBI is trying to do, I think are really welcome. I think they should. For example, just to give you one example, on the prompt corrective action framework, right? You see, just by way of background, we all know there's an election calendar, right? We can't ignore that. This is politics, right? And therefore, whatever. But I think what I would like people to step back and view this as, look, if this were a 1-year problem or a 2-year problem, maybe we say let's tide it over till appropriate circumstances arise and we, address it again. But this is kind of 8-9 years, as I say, right? It's a long time. So, the more you procrastinate on this, the more it seems to me that not only the chances get worse, but the problem actually accumulates. So that's why I think that...
So do the PCA, stick with it.
I would on this, say that, because in my 4 R's, the reform, right? One is what you do with the medium to good banks. I think some of them need to be privatized, right, at some point, right? But what do you do with the unviable ones, right? And really, the PCA is really, Governor Ivy Reddy's original thing, right? You basically shrink that. Now, I think that unless we do that, we don't get a banking system that looks efficient, like 4 or 5 reasonably big-sized banks, and I think we have to find a way for those unviable banks.
You're not getting the political push.
Yeah. And I think we should kind of pursue that because that's part of the reform solution. I think because consolidation is not I think a viable alternative. We know that. I mean,
you can't. Weak plus weak gives weak.
Yeah, weak plus weak, weak plus strong maybe also weakens the strong. So I think that. I would very much favor, the PCA framework remaining and being strengthened, and I think the RBI has done a very good job on that. Just to add to that, I heard, for example, someone saying that, we must grow our way out of the PCA problem, right? It struck me that it was the imprudent lending that got us into this in the first place. So if you lend more. See, I think lending more, if you had better governance, better incentive structure, you can be more confident. But if this is going to be a repeat of the past, then I do worry about that.
Yes, there's one culpability which I went through your book very rapidly, is perhaps not being addressed. The governance part of government also has not delivered. I mean, you spoke about power, and that's why it occurred to me. Yes, you can postpone the power problem, and maybe it is willy-nilly getting postponed by the courts. But the government has not kept its part of the bargain. One expected a lot from Uday. But what happened actually was that Discom loans became state government loans. So actually, banks earned less because now you have a solid borrower. But the fall in AT&C losses, the fall in pilferage, all that never happened. And when discoms continue to sell 100 units but get paid for 70 units, they are not signing new PPAs. So the real problem of creating the bad power assets actually lies with governance, isn't it?
So I think that I haven't seen the latest Uday figures myself, the ATC loss, etc. But if what you're saying is right, that we've, the financial part of it went through, but the real reform part maybe hasn't gone through. I don't know.
It's fallen a little, but nowhere near the target set.
Near the target set. So I have actually a chapter on power in this book, and the power sector has always struck me as an area where it's not just government governance. I think it's really an area where it has to be central government, state governments coming together in a cooperative federalism framework like we did for the GST. Because I think the problems of power are very serious, right? And I think we need, and that's another reason why you need a sui generis thing, because you need not just the central government, but the state government also
it needs to
come into the picture, right? And then you have NTPC and, so all kinds of things. So that's why I think that, and to the extent that it hasn't happened, you're right. I think there has been a shortfall, but I do think that we need to treat this in a kind of a cooperative federalism framework and sui generis framework.
Okay, now let me just come to the NBFC issue. One of the reasons why I think the Reserve Bank doesn't want to let out banks from the PCA is they very much fear that they may buy up the bad loans of the NBFCs. You think that's a legitimate fear? I mean, they were made to lend to infrastructure when probably the danger was not understood. Now, if they are let out of PCA, they may end up buying the wrong loans.
I mean, as I said earlier, I mean, if you allow them to lend more,
they could lend wrong.
Yeah, exactly. I mean, because if you were confident that the underlying governance structure had changed, but that hasn't happened. So I would be extremely cautious about, I mean, instinctively, I don't kind of buy this. We can, lend our way out of the problem.
All right. Hold that thought, Dr. Subramanian. I have to take a break, but we have lots more interesting questions about this book from Dr. Subramanian. Just stay right there. We're back in a jiffy.
CNBC TV 18, celebrating 19 years of business leadership.